Good morning, ladies and gentlemen, and welcome to this session on the ultimate corporate wish list. I'm Helen Sanders, editor of TMI, and I'm going to be chairing the session today. We hope it's not going to be so controversial that it's going to end up umpire rather than chair, but we'll see how we go. Now, first of all, before we start, I'd like to ask our panel to introduce themselves. We have a select group here of corporates, real-life corporates. So please be kind to them because we, as the corporate community, are somewhat outnumbered at Sibos this year. So we do hope you will be kind. Torben, can I ask you to, Tobias even, can I ask you to introduce yourself first? Clearly, I even need that.
So good morning. My name is Tobias Thiessen. I'm a senior treasury officer at the Global Fund, and I'm a board member of the Association of Corporate Treasurers for the French-speaking Switzerland. I think in terms of Global Fund, it's probably a bit different from the corporates that we see here because it's an international organization, in fact. And in fact, it's based in Geneva and in Geneva only. So I guess it's a dream for every treasurer, in fact. On the other hand, we disbursed about 150 countries. So we have a big set of currencies we are exposed to. We had the chance to implement the treasury from scratch. So we have a new treasury management system in place, which we integrated with the SwiftNet, and we connected to all our core banks. So we have a fully automated end-to-end process in place now.
Thank you. Betsy.
Hi, my name is Betsy Clark. I'm Director of Treasury for Alliance Data Systems, which is headquartered near Dallas, Texas. I am responsible for the cash management piece of our Treasury department. The payment center is mostly centralized near Dallas, with some regional centers in LA, London, and the Netherlands. We are currently in banking in 24 countries with over 35 banks, about 125 legal entities.
Thank you. Phil.
Hi, I'm Phil John from Mars, not the planet, I hasten to add. I'm the EMEA Treasury Director, as well as being responsible for 45 odd countries in the region. My team and I have global responsibilities for the in-house bank, so payment factory, multi-currency notional pooling, supplier finance, intercompany netting, and EBAM. We have treasury centres in the US and the Netherlands, that's where I am, and in China. And we have a whole range of bank relationships. We tier them as strategic banks, which we have about 8, and then about 20 preferred banks, and then the rest are local banks.
Thank you. And Shahrul, finally.
Hi, good morning all. My name is Shahrul. I'm attached with Felda Global Ventures Capital in Kuala Lumpur. We operate in the main regions. We've got offices in North America, the Euro, ASEAN mainly, and also MEA. Basically, we are in the business of treasury management center with regards to asset and liability management of the group and FX management.
Thank you very much. Now, when we first started looking at the theme, the ultimate corporate wish list, then clearly there's a number of things we could be covering, from obviously expensive holidays, fast cars, those sorts of things. But we're going to limit our agenda today in terms of what corporates really want from their banks specifically. And as we know, SWIFT is a key enabler of that, but ultimately it's the bank services that we need to receive from whatever channel it happens to be, whether it's SWIFT or a proprietary channel. So first of all, I'd like to ask you, Betsy, if that's all right, what are the frustrations perhaps that you've experienced, first of all, that you're really looking to overcome?
Sure. Visibility into our data. So Alliance Data Systems is a big data company, and our bank data is just as important to us as our marketing data. So when we go to our banks and we say we want to pull your data into our TMS system, the first thing they do is say, hey, we have this great bank portal. We're going to get you a token. And although I love my little tokens and I have a carry-on size bag of tokens, that is really not an efficient way to get my data. So we ask the banks to send a transmission file. Say, great, set up a direct SFTP connection. That sounds easy. Or we can go through SWIFT. That also sounds easy. Not so much. So what we found is that over 35 banks, there's always some sort of customization. The bank has a customized file format, has a file naming convention, a file hierarchy structure. There's something customized that my IT team then has to go develop, configure, integrate. Takes a lot of time. And then for those banks, I'm lucky enough to actually get the data. The data, I mean, we all know this, it's not rich enough to really report on. So great, I have a BAI code 195. My CFO doesn't care about 195 having $30 million. He wants to know what makes up that number that's 195. So then my team ends up doing a lot of reconciliation rules, ad hoc reporting to dissect the information into a meaningful report for management. And that's how we end up getting visibility. It's very manual process.
And Phil, how consistent is that with your experience, perhaps?
So I'm pretty happy that we have some level of connectivity using Swift. But I do share a lot of the same things that Betsy mentioned here, just about getting standardized information and particularly getting enriched data beyond strategic banks. That can be really challenging. I mean, as a corporate treasurer, our workload just increases and increases, and we'll come on to some of the environment later, but there are many challenges. So automation, transparency, visibility are really crucial. Any way I can get efficiency to keep my team the same size. I'm currently under the usual annual pressure of cutting overheads again, and yet expected to deliver more work. Given that we've got multiple bank relationships, inevitably, and that's partly driven by counterparty risks since 2008, it's really important for us to increasingly have bank-agnostic solutions that really help us efficiently to connect once rather than multiple times with the outside world. I just wanted to throw a simple one out there. Year-end for me, closing the books, just getting standard bank confirmations to the auditors. If we could only have a Swift message, and in December the banks automatically sent SBCs direct to the auditor, it's a no-brainer. It's a simple bank statement. What a saving that would be. That's just one of many examples.
Thank you. And Tobias, you obviously are, as your name suggests for your organisation, a truly global organisation. I know that you've been working with Swift, as you mentioned in your introduction. As a global business, has that really meant for you?
Yeah, well, I think the way I would classify it, I think we have probably two realities when we are implementing Swift. One reality is if we implement Swift in Europe, the US and a couple of Asian countries, where you have the banks all offer Swift connectivity. It comes back to Phil's point, is then it becomes a new implementation every time because the formats are not consistent. A very recent example is we wanted to have a reference number in our payments to be sent to the bank and back on the bank statement, which I got 3 responses from top cash management banks. One was, of course, we can do it. The second one, of course, we cannot do it. The third one is, well, we would like to do it, but we don't know how. That's on the Europe side. Then the second reality is actually if you go to emerging markets, and I'm talking now more about Africa, is where typically corporates is where you need most of the visibility, where your reporting capabilities in-house are actually probably less good as in the developed countries. And there, I think most of the banks, they see the need, they want to offer the service, but they're not yet there. And there's a lot of inconsistency in terms of file formats, much more than obviously in emerging markets. But I think that's probably a very big opportunity for the banks is to develop that side.
Thank you. And Shahrul, obviously, is an Asian headquartered company. How consistent is that experience for you?
Exactly the same. I mean, the experience I had with banks, not only domestically in the ASEAN region, even those in, if you don't mind me mentioning a country, a Canadian bank, which was surprisingly not on Swift. So I had to reroute my Swift messages to another branch in Hong Kong for the Hong Kong company to literally print and physically snail mail it to Canada. So I think it's a little bit alarming that domestically ASEAN countries are a little bit slow in adopting the SWIFT so-called era. But I was surprised that North America, you have some banks that is not on SWIFT. It is a small branch, but mind you, it is in a major city in Canada. So I think for corporates like FGV, as much as we want to be advanced in how we do things, I think banks have to play their role as well.
Thank you. And Phil, I know one of the experiences you've had linked to this is to do with formats as well as actual connectivity.
Yeah.
Is this idea of standardization, you know, once you've managed to get a common platform perhaps, how you're using that common platform in a consistent way?
Yeah, it was pretty frustrating. I came new to the world of Treasury 11 years ago, and we set up the in-house bank, and I thought when I heard about standard messages and formats and iDocs out of SAP, this was going to be a walk in the park. I very quickly learned that these were all non-standard, and it took us a huge amount of effort. I think I'm going to be bold enough to say that non-standardization costs more money and time, from my point of view as a treasurer, than anything else. Historically, I mean, banks have been around forever, and their products particularly naturally they've tried to differentiate themselves from other banks. I'm continually repeating the idea of bank agnostic solutions because it's very frustrating if you have multiple relationships to have to connect so many different ways and then in non-standard ways. We did move to try and turn the table to creating a single XML format and then telling the banks that this is what they would use. And I got help from one of our strategic banks to work across 4 banks. But the collaboration turned out to be more like an aggregation of everybody's needs than a true consolidation and integration to the minimum that could be required. So it was a success in some ways, but I had a spreadsheet with 4 columns for 4 banks and something of the order, I don't want to exaggerate it, it was hundreds of rows. Now, most of it was to accommodate differences in the banks rather than being willing to collaborate. I really want you guys to collaborate. I don't think standard interfaces are an option anymore. They're a basic necessity for any corporate. And I look forward to meeting the Bill Gates or Steve Jobs of the banking world.
So if you're here, perhaps make yourself known at the end, if that's all right, please. No, that's interesting. So I think so far one of the strong themes we have is the genuine need for one single channel, or bank agnostic channels at the very least, standardized information that's based on collaboration rather than aggregation, and a recognition that the relationship with a corporate has with their bank is not just in the main branch or the relationship branch. It's often a global relationship. So clearly banks need to be providing the same level of connectivity services across regions and across branches. Moving on from that then, one of the issues that we know, the basics of doing business with a bank is things like opening, closing accounts, dealing with signatories, for example. And when I mentioned this in our preparation call, that raised 1 or 2 issues as well in terms of the experience that perhaps you've had so far with that. So I'm going to come back to you again, Phil, if that's all right, on this, because I know, again, it's something you've struggled with.
Yeah, well, I'll approach this in 2 ways. But very quickly, we've got something like 100 accounts in the Treasury Centre that I run. And we've had a number of changes of staff, and it's taken my team nearly a year to change the signatories out and in, and that's begging for workarounds and speed-ups. So here I am trying to convince everybody else to be compliant CFOs in business units, and I'm really struggling to do it myself. We did venture on the second level into EBAM. Back in 2009, my boss was very keen that we adopt it. And
that's electronic bank account management. Sorry for those who aren't familiar with that.
Thank you. So I pursued this with some skepticism to start with, and then became a real fan of the idea. I even spoke at conferences and attended them and tried to, and I just waited because I realized very quickly that I couldn't take, well, with the many bank offerings that were starting to emerge. Some were concrete, some were vaporware. But again, multiple solutions. Am I going to sit there with multiple devices? Am I going to sit there with multiple e-banking and now with multiple e-BAM? I did wait for a central repository to be created. I longed for it, but it never took place, which was really sad. So I ended up internally building our own. Now, it's really served us very well internally. We don't have that electronic piece to the bank, but Courier does that piece really fast, so I'm not too bothered. But what a shame that there aren't more of these available agnostic central repositories which are secure, which should actually bring some of the standardization.
Great. And Tobias, this is eBAM and BAM are something that you've had an interest in as well, I understand.
Definitely, and I think I started hearing about eBAM in 2010, and I still hear about eBAM, but frankly, I haven't seen an end-to-end integrated offering from any bank, any service provider. Obviously, you have treasury management systems that help you manage bank account information, but that doesn't solve the problem of getting signatories from CFOs, board members, and so on and so forth. So I think that's a huge opportunity and is a big problem. Also in terms of increased compliance, that's certainly interesting to have.
Right. And Betsy?
I completely agree with what these guys are saying. eBAM feels like vaporware. I mean, you can't automate a process that doesn't work, and the process doesn't work. So until we fix the process, build in standardization, there's no way eBAM is going to work. And it has to. We have to get off the basics.
Great. And Charles, your experiences are slightly different because the environment you're operating in is a little bit different. Yeah. Where are the similarities and perhaps where are the additional complexities?
Right. It's not so much an issue with FGV in terms of managing eBAM or BAM. Our signatories are quite exhaustive. We've got a nice set of structures that can work. My pain with this electronic account management is basically whenever there's a SWIFT message coming in or going out to a bank, there is always a gatekeeper at each bank. Preferably, we'd like our transactions to be an SDP transaction, a straight-through processing. It worked well during the first implementation phases where everyone was on their toes. But as things progress, things got taken for granted. And instead of a noon to lunchtime cut-off processing, it goes to the close of business. So it's alarming as the SWIFT for corporate agenda in the ASEAN region is not up there in terms of execution. And again, I do appreciate the fact that there's not many multinationals in that region. The demand maybe is not there from a bank's perspective. But then again, we need to start somewhere, I guess. So that's my main pain in terms of electronic bank account management.
Great, that's helpful. So I think some of the takeaways we have there is that BAM and eBAM, so bank account management and electronic bank account management, have been discussed for a long time now. And I think now, perhaps in some cases, banks were concerned that there wasn't necessarily the corporate demand for those solutions at that point. Clearly, you've heard today that there is a very clear demand for integrated bank account management solutions that can operate across banks. So that's something that I hope we see some progress on in the next 12 months or so. Now, one of the key, the related topics to BAM and eBAM is, of course, compliance and regulation. And we've heard over the last couple of days that compliance is clearly an enormous problem for banks, but similarly it becomes therefore an important issue for corporates as well. So I'm sorry I'm coming back to you again, Phil, as the pioneer in many of these thoughts. How are you seeing the compliance environment evolving, and what does that mean for your business?
Well, it really concerns me, and I expect that that's shared by everybody in this room. KYC is a significant issue for us. I do have a problem when banks ask us for more than they need, because it's nice to have, or they change their mind after 3 months that the documents they gave us actually they didn't mean that one, they meant this one, or if there's document creep. So if I'm going to bash the banks, then it's on that incremental piece. But on the core of KYC that has to be and the must do, and Mars fully and I fully intend to be compliant, it's a real concern because I have a fixed size team, and I feel when people often talked about the treasurer of the future or the treasury organisation of the future, that could look like a team of administrators, lawyers and compliance experts, and that has nothing to do with getting our business done. And I'm sure as a bank you feel very frustrated too. It contributes nothing to our business goals. So as long as it has to be on paper, I'll give you two contrasting examples. A wonderful situation where I was potentially taking work away from a bank. I needed to open a series of accounts, do some sweeping and pooling. So not too difficult. Firstly, the bank came to my office. Secondly, they brought every sheet of paper I needed to go through and sign. They gave me an overview of one chart per block of paper to explain what it was for and why they needed it. And then once I'd signed them all through an hour, found the gaps that I'd made and never came back with any change or complaint or difference. So as long as it's on paper, that's outstanding. I had another instance where just to change some signatures on an account, I was going to be asked to take an 8-hour flight to make sure I could sign it onshore, which just seems appalling to me that that could have even been a requirement. Now, I don't know to this day whether the bank made that or the local regulations insisted on it. We worked around it, but that's the other extreme. So my call to the banks is to work with us, but particularly to work together with governments to reduce the regulatory need and to make it simpler and more efficient and less paper-based, so that we do make ourselves safe, but we do it together in a realistic and manageable way. And maybe just from the last session, I still dream that blockchain might be a solution in the KYC area. I don't particularly get enthusiastic about bringing it to payments and other things that are already working beautifully. But it does strike me that the audit trail and the sign-off and permanent record, this could be a really exciting area. And if you wanted to make a difference to us as corporates, then this is what you would attend to, make our life easier.
Great, and I hope we've got some representatives from some of the bank's innovation labs here who perhaps can think about how we can be achieving this. Shahrul, your experience is perhaps on the payment side of the sort of compliance area. Tell us about your experiences.
So just to share a bit on FGV. FGV is the largest palm oil producer in the world, and obviously the production is not meant to be consumed internally in Malaysia, Kuala Lumpur, I mean. And our market is out there, and you do get traders working with us, commodity traders. And the significant problem I had with risk management is red flags companies. When you go global, you don't typically have access to a reputable credit, from a financial perspective, but not from a red flag banking institution reference point of view. So we did one payment out. It got blocked. We used SWIFT to do so. And it took us nearly 3 days to get it out of the system. So I think we need the banks to assist us maybe to get a particular process flow in place for us to do our own KYC from a bank's perspective, not from a financial business perspective, but more of the regulatory red flag list maybe somewhere that we need to do. So I think that is one of the risk management that from a business perspective, their credit is good. We like them. We've been doing business with them. Unfortunately, that payment was moved from, can't recall which country, but it eventually went to Singapore, a subsidiary of the said conglomerate or the buyer, and that company had red flags all over the internet. So I think we need a little bit of help in terms of just-in-time management of our cash. where you've got a legal responsibility to make good on your payment.
Great. And Tobias, this must be an issue for you, bearing in mind the regions of the world in which you operate.
Absolutely. I think that's actually we get this feedback from the association as well. Compliance is probably the number one problem now. For us at the Global Fund, I think 3 days for a payment stuck is actually quite good.
It is.
We had payment stuck for 20 days. So there, for me, there's several aspects here. First, it's about information that we send to the banks in the sense that nowadays we receive 1 page of questions and 2 pages of legal disclaimers. So it's not only a question
in very small writing.
It's very small writing, exactly. So it's not even a question of compliance. It's legal. You involve a set of departments. There's a big discussion, a big process around this compliance that usually the banks don't see what happens. The second point is it's communication with the banks, which has become very cumbersome around compliance. In the sense that even if you give an example, we have a OFAC license to make payments to certain red flag countries, and the banks will tell you, well, we have the right not to make the payment. So, okay. We say, well, tell us why. They will tell you, well, we have the right not to tell you. And then we let them, okay, let's talk to the compliance officer. Well, the compliance officer is not authorized to talk to you. So it's difficult. And I think one of the trends which is probably very, very dangerous is that concerns more the smaller entities and other smaller international organizations that I'm talking about. Is you probably start using alternative services like cash delivery services, currency brokers, to send cash to certain countries, because you can't do it via the normal channels. So, in fact, what you are actually increasing the risk in this system for these institutions, because there is no other alternative. So regulators obviously put all of this in place to decrease the risk, but practically I have the impression that at the end of the day you increase the risk, or also you start working with much smaller banks that have less stringent compliance requirements. And I think that's a dangerous trend in the industry. So.
Absolutely. So I think some of the sort of the takeaways we have here are to do with collaboration, just as we saw before, but collaboration with regulators, collaboration across banks, and some consistency of approach. Obviously, if there is a regulatory requirement to do something, that needs to be universally applied rather than patchily or inconsistently applied, as perhaps we have today. Now, the things we've talked about so far will probably have come as very little surprise to most of you. Certainly talking about connectivity, visibility, EBAM, regulations. Probably if I'd asked you at the beginning what you thought some of the issues were that would come up in this session, they're probably the ones you would have talked about. But the next topic that we had, which we discussed amongst ourselves beforehand, perhaps come as more of a surprise. At least I think they may come as some more of a surprise, which is not to do with the tools that banks are using, but it's actually to do with the way that banks are organised and some of the expertise they're providing. So I'm going to ask you again, Phil, because that's the way it works. I know that you have a little bit of a gripe with some of the advisory services that banks are offering.
Well, I'd like to speak on behalf of the whole kind of business community in saying this, that I think we're quite privileged at Mars because we're a large multinational and we have some sway and leverage with the banks. But I fear for a lot of the SMEs that, any kind of debt financing becomes a cross-selling opportunity under pressure. I think for me, whatever size of organisation, the real winning way in a lasting relationship, and we talk a lot about relationships, is advice. the willingness for a bank to bring to the table and to help me, both in what's going on in the world, how would I achieve something, how do I approach a new product area that I've never even gone into before or understood. Just in getting that knowledge and doing it without any sense of, at the end of this, I'm going to ask you for an order. And the banks that particularly have succeeded with us as a corporation are those who've been prepared to make that investment of time in the relationship at the risk of not winning at the end. And on occasion, I can think of times when we had, you have to pick and choose where we've awarded work to somebody, and the second bank in the queue did really well in terms of advising us, but that's then influenced me in going back to them on the next need and requirement, and I have done, and they have succeeded. So that's really crucial. I really encourage advice over classic selling. I switch off that fast if somebody's just going to get the price card out and start talking me through products again.
And I think you've, from what we've discussed before, you've also had a frustration in the consistency of that advice across branches, for example. Would that be right?
Yeah, it happens within banks and between people. Who you get specifically can make a big difference. I'm probably more concerned, Helen, between banks in the same market, whether it be about products or regulations and compliance. Cannot understand how there can be so many different answers. We do an exercise every 2 years to collate a whole repository of tax and treasury and consultant and bank and our business unit information into an internal repository. Just to give an example, one of the questions I ask is, can I pool domestically in each of the 74 countries the domestic currency or foreign currencies, and can I cross-border pool into, for instance, London? And I ask a number of banks because nobody covers everywhere, and I bring the data together and I overlap it, and I think, how can the answer be yes here and no here? If you're confused, how do you think it is for me?
No, that's an interesting observation, and and that's something which I think is possibly easier to remedy, I would hope, than some of the issues we've talked about so far. Betsy, what's your experience?
I completely echo what Phyllis said. I want my banks to be consultative. I want them to come to me with best practice solutions. I want them to tell me lessons learned from other implementation projects. I want to know that. And I'm transparent with my banks that I want them to tell me, I'm telling you how we're doing it. That doesn't mean it's the best way to do it. Please let me learn from your mistakes. And they're hesitant to do that. But the other problem is the banks are really siloed vertically in their product and service offering. So when I ask them something, they have a really hard time reaching horizontally across the organization to find that resource. So then I end up having 3-4 meetings before, and somebody's like, I think it's Dan. No, it's Doug. I'm like, really? Can you bring the right person the next time? So we start losing momentum, and it gets frustrating. And then we start reaching out to other providers, to be honest. But the other thing is, because banks are not able to reach horizontally, you don't know what my business has with your bank as a full client footprint. So I may drop $50 million, and the transaction service guy is like, that's awesome. I'm so excited about that. Meanwhile, the same day, the capital markets guy is calling me up, what have you done for me lately? It's never enough for the bank because you're not talking to each other. And I may be injected at several different points, but you're not seeing that. It's okay.
That was brilliantly timed. I didn't realise Siri was quite so supportive of this whole proceedings. Charles,
Right.
What's your experience?
Well, I'm quite fortunate, I think, again, as our, personally, I think my global account manager is superb. I mean, yes, I agree with Betsy that horizontally the banks is very diverse. But I think hitting the sweet spot with a particular relationship manager, I always tell my bankers that I don't speak to the bank, I speak to the person in front of me. And I've seen cases where if he or she picks up and just leaves, things does drop and everything breaks. And again, I'm fond of actually, moving with a particular person that I'm comfortable with. Given that the system is on par, processes are on par, I think again the person behind the desk plays a vital role. And again, I'm repeating myself that I'm quite fortunate that that bank has very good people in terms of relationship managers, and they reach out almost immediately to the right people, except for SWIFT. So I had a particular problem with this bank, major bank with FGV, and they didn't know, or they knew that they had a SWIFT department, but they didn't know who was running it. They was like, interesting. I'm trying to get messages across. And again, I don't know whether this is out of sincerity or they're just playing around to say that don't go on SWIFT, do a host to host with us. But again, yeah, I think coming back to the topic of organizations, banks. Again, I'm keen on working with a particular brand, not too much with a particular brand, but more of with the person who is knowledgeable enough in advising me.
Right. So quality of support, consistency of support, and that view across the bank are clearly pain points at the moment, which is, I would have thought, perhaps easier, as I said, to resolve than some of the other issues we've talked about so far. One issue which I think is probably not going to be as easy is the issue of bank exits from particular markets, which, as we know, is causing corporates a lot of pain. And Tobias, probably you have been affected by this perhaps more than many.
Yeah, I think that's a difficult discussion because obviously it touches bank strategy. And I can say from a global RFP we did within 6 months, there was one bank quitting a certain region, which completely undermined the RFP. The second one introduced new compliance requirements, excluding certain countries as beneficiaries. So it's difficult for corporates nowadays to choose a reliable banking partner. And there was in the past there was that nice corporate treasury idea of having a set of limited number of banks, so they cover a certain region and you concentrate with them. That's obviously, if you consider the SWIFT cost and the compliance cost and so on, that all makes sense. I have the impression that nowadays, due to all these risks, and banks, obviously that's also related to banks getting major fines in certain countries, which you never know when it's going to happen next. You, as a corporate treasurer, you have to have some sort of backup and probably expand your banking portfolio. You cannot just rely on a set of 2 or 3 banks because it's too risky. And I think obviously that's consistency is something that we would like to see. On the other hand, I can understand the banks that obviously they changed their business models. We heard from banks that said we on purpose we don't pay red flag countries because that's not our business. We don't want to deal with it. Others say we buy into the risk. So I think there needs to be a discussion in terms of how consistent banks are with their strategy.
Mm-hmm. And presumably just making sure you're aware as early as possible, particularly if you're getting an RFP 1 month Absolutely. And then the service is being pulled a couple of months later. So we know that bank exits in some markets is inevitable, but it's how the impact on the corporate community can be managed as far as possible. So in terms of other sort of conclusions or takeaways from this session, Betsy, what's your view? If we were to sort of combine all of these things together, what would be the thing you would really be looking for from the banking community?
Well, I'd love to sit here and tell you that we're working with the banks on some really visionary corporate initiatives, but we're sort of drowning in the basics. We're drowning in the paperwork of BAM and KYC and administrative services. It's like the big elephant in the room, and we want to be talking about real-time payments. We want to be talking about cybersecurity, but there's the big elephant in the room, and it's really messy and dirty, and nobody wants to deal with it. Just keep walking around it. And I think until we deal with that or find a way, I don't know what the answer is. But I think we really need to get serious, stop talking about it, start doing something about it.
So sort of a back to basics approach. Phil, your thoughts?
Yeah, I totally underwrite that, what Betsy said here. Complexity is on the up for all of us. You know, whether it be BEPS or FATCA or KYC or just the world we live in, volatile markets that we're having to sustain, moves in currency, threats of pooling and that kind of thing, Brexit, you name it. And yet we're having to support the business to get the cash in the right place at the right time. So anything that can be done to genuinely address the corporate or the customer requirement to ease that. And it's a win-win, you know, because the more time I and my team spend in all of these distracting activities, the less time I have to review the products that you have on sale, and definitely the less time I have to implement them. I'm being dragged back to the basics. So if you're going to invest, don't do it in the classic areas of what you've already done on the payments and all these things. Look for the things, I think, as one of the speakers in the earlier session said, more on the fringes that would deliver to us in this whole elephant in the room. So completely aligned. Thank you.
Shahrul.
Yeah, looking at my notes, I can't say that the KYC is a problem for us. We do half yearly, every other year, we do open sessions with all banks. Typically in Kuala Lumpur, we'll invite all the banks for a yearly session. We showcase what we've done in the past, what are the limits we have, what products we've executed, the cash that we place within the markets, who gets the money, what rates you give us. So we are very transparent with the banks in Kuala Lumpur. So basically, we are telling them, hey, the cake is there. Money, I would suggest, is enough. Let's spread the cake. So unless and when the bank comes back and offer me more limits, maybe more services, only then we start the KYC. But nevertheless, in each session, the subsidiaries in this particular statement, FGV Capital is the TMC of the group. And we share all the statutory documents. We give out our yearly financial statements freely to the banks on a yearly basis. So in my mind, the KYC is done irrespective of whether the banks wants to do business with us or not. We do get a little bit cold calls that we entertain, but I'm being practical about things. Not all banks want to bank with us. But nevertheless, we still continue to supply them with enough information for them to literally go back and say, this particular brand name has, we've got no risk with you. Then slowly after a couple of years, they come back with maybe $50 million worth of limits. There was one particular bank that I'm very fond of. We started off with very small. It was 150 ringgit. That's what, $40, $30. We went up to $500 million with them. And that came about, 3 years. And the person who sat in front of me was an Indian chap. He came in as a manager. 3 years later, he was an SVP with the bank. So that showed how, me and that particular gentleman worked hand in hand to get business moving. And yeah, I think in conclusion, there are more things to do. Coming back specifically to SWIFT, I want to highlight that most of the cash messages within the ASEAN region is up there, what we're doing. But I think the non-cash messages, the LCs, the guarantees are not widely used within the region. And those are the things that I would like to explore further with the banks. Yeah.
Okay, so more use of a more consistent or a more complete use of
Exactly.
the SWIFT capabilities by some of the banks in the region. That's great. So that sort of brings us to the end of the conversation we were going to have today. But before we close, we wanted to invite any questions that you might have for any of the panel today. There are microphones coming round, but if before you give your question, you could just give your name and the organisation you're from, that would be really helpful. So we've got a question just here in the middle. There's a microphone coming to you.
Hi, guys. Microphone's not on, but talk. Hello.
Yes.
How important is interday liquidity to you guys? I was attending a SWIFT meeting yesterday when all the banks were talking about the increased reporting requirements on interday liquidity, and I work at GE, and that's a constant pain point for us and a requirement that we push our banks very hard on.
Thank you. So the question is, how important is intraday liquidity to you? A question from GE. I didn't catch your name, I'm afraid, but you mentioned you're from GE. Is that right? Yeah. Any observations on from the panel here?
If I may add, well, I think it comes back to the point where the two realities that I described before. It's in Europe, obviously it's nice to receive intraday liquidity, and most of the banks can provide that as long as you're integrated via SWIFT. If you talk about emerging markets, that's a luxury that a lot of us do not have. I mean, just receiving a bank statement via SWIFT that would be something excellent. So, and for us at least, it's not such an issue to have intraday liquidity, but that might be different, obviously, for the others.
Yeah, for Alliance Data, it depends on the bank, it depends on the business unit, depends on the region. We're okay right now, but the real-time payment thing kind of scares me a little bit. So that's where it's going to come into play for us. We're able to work with our banks right now and get lines in place to cover it if we need it. But I'm concerned what's going to happen given the amount of credit card payments that we have, consumer credit card payments that we cover every day. It's millions of individual payments. So that's going to be a problem.
Okay.
I think from our perspective, we're in a pretty happy position. We are cash rich and we've got our pools, we've got mechanisms in place. By and large, we can deal with the things that we need to, so we're very fortunate in that respect. But I do wonder, longer term, how much the regulations and capital restraints on banks are actually going to bring cost into that environment within the day.
Cheryl, any final observations?
I echo all
side?
the statements made. FGV does liquidity management for Indonesia and Malaysia, and from KL, I mean, and with SWIFT and the support from the banks in Indonesia, we're quite comfortable with our liquidity management. Predominantly, our money is in Malaysia and Indonesia. But yeah, liquidity management or real-time liquidity to get the liquidity management on a real time is something that we are managing pretty well.
Okay.
Good.
Any other questions? Got a question here at the front.
Thank you. David Blair, Akarati Consulting in Singapore. My question is about, since KYC onboarding and all that is so painful, how many of you have joined or are looking at joining a KYC registry like OrgID, KYC.com, or one of those?
Great. So how, I'm not sure how aware you are of some of these central repositories or central registries, but is this something you've come across and been actively involved with?
Genuinely just becoming aware of. I mean, I plea for them, really.
Yes.
I think the big question that we would have internally is, do I create that repository internally where we feel, and our senior managers and our board and our lawyers feel happy that it's secure, or are we happy to place it somewhere else with a third party who is skilled and gifted and designed and can manage it? I obviously would prefer the latter, and it's going to be understanding that and how I'm going to do the internal convincing to translate to that does seem to me a very exciting way, in line with what I said about being bank agnostic, having it once and having it digitally. That's quite exciting.
And presumably, of course, it has to be widely accepted by all of your banks as well for it to be
Oh,
meaningful
indeed.
for you.
Yeah, no, thank you. And I hate to mention cybersecurity, but that whole essence of that's very valuable information now.
Except right now, in the environment we're in.
It is.
And about you, that I get a random email from some banker that I don't know that says, hey, can you send me this guy's passport?
Yeah. Yeah.
Sure. Yeah, I'll get that right over to you. Just want that
You're right.
email. Flash drive, what do you want? It's not secure at all. It's not workable. So yes, I would definitely sign up for a KYC registry.
Great. Thank you. Thanks. That was a great question. We've got one just there. Perhaps you could just let us know who you are first of all.
Rania Llewellyn from Scotiabank. So a lot of discussion was around onboarding and some of the challenges around onboarding and some of the opening up new accounts. But I'm just curious from your perspective in terms of what would be the key drivers for you to decide to switch your banks? Because there wasn't a lot of discussion around the servicing aspect of it, and I'm just curious if there were top 2 or 3 key drivers for you to consider switching your banks.
Okay. So the question is, what would make you switch banks? That's, again, an interesting question.
Well, we just did an RFP about 3 years ago to transition our domestic banking, and it came down to, honestly, who was in our credit facility, and also technology. Who could provide the latest and greatest technology, which bank. That was the final 2 indicators for us. And it's been a 2-year process to transition our domestic banking.
Yeah, if I may add, we had, as main criteria, we had technology, obviously. You had customer service and compliance checking. And cost, but I would say cost is obviously important, but is not the main driver. If the other 2, if the bank has a competitive advantage, especially compliance, we would be happy to pay more just to get a better service. So.
And do you routinely review your banks and make decisions of which banks whether you're going to stay with your existing bank or change, or are there triggers that would prompt you to change, to at least review banks?
So we have strategic global relationships, and we look to long-term relationships. So we're not in the business of wanting to be changing banks all the while. Now, it's fair to say we still have quite a few local banks, and just for complexity reasons and for all the reasons we've discussed today about interfacing and getting all the data in, it would be nice to switch out. And we do have from time to time, either because of exits or because of poor performance, have to look, or where we just have never actually done the work to do an RFP on a local basis. For the local units, the language is often price. For us, centrally, it's all about governance. But in the last 4 RFPs that we've run, we have a whole new section on ability to manage compliance. So that probably isn't a surprise. It's difficult to measure. And what we've tended to do is to ask for what are the documents that you're going to require from us if you win. Show us today before we choose.
Interesting. Another question on the same side, just over there.
Julia Persson, Swedbank. You mentioned the criteria as technology, price, compliance when you're selecting your banks. But before we were talking about advisory. How important is advisory for you when you're selecting your providers? Thank you.
So how important is advisory to you when you're choosing a bank or reviewing your bank's performance?
That came into the technology play for us. We really needed to make some changes in our technical structure. And so the advisory came in with the technology piece of it for us.
So we do have annual evaluations of our banks as a minimum, and on the relationship aspect of that, one of the 5 criteria is on this whole area. I think it is it's pretty key for us.
So the quality of support and ability to share best practices and sort of contribute to improving your business, not just servicing your business.
I guess it's more important at a global level when you're taking on a whole new product globally than it is at the local level. I'm less worried about advice. Although, to Betsy's earlier comment, if I'm going into a new market, for instance, what have you already learned? How did you handle katakana? How did you implement? What hiccups? And I find it very difficult to get that information, just like you said. Mm-hmm. You kind of feel like you must have been there before me, so help me here.
Yes, great. A question here at the front.
Joel Clark from Sibos Issues. Given this list of areas where banks are falling short of your requirements, do you think they will remain your counterparties in the long term, or do you think non-banks could step up to be at least part of the service provision that you're needing?
So how tied are you to your banks, and could non-bank providers at least provide some of that service or some of the services you currently get from your banks?
Well, I guess it comes back a bit to the point of strategy that I mentioned before, in the sense that we would obviously like to have long-term relationships with our banks because it's easier, it's a win-win situation for both. But then if there is a service like compliance that is not working, that there is an opportunity for probably smaller entities, smaller banks to start providing these types of services. And we obviously try to work with our banks to say, listen, what can we do to improve communication here? Let's facilitate the process. With some banks, it works better than with others. So that's obviously a risk for each of our longer term partners if that doesn't work. Because at the end of the day, it's more work for them, it's more work for us. But there is a tendency for long-term relationship with the risk that if the service is not provided, that then smaller banks come in or service providers.
Mm. Presumably that gives the risk, though, or additional type of risk, though, since particularly if you're then working with an unregulated entity.
Exactly.
Any other thoughts from other panelists?
I agree with what Tobias said. I mean, you want that long-term relationship. We appreciate what the banks bring to our plate. If I have to share with a non-bank, it's because you're not doing something right.
Yeah, well, just building on the same, really, I think, you ask us about our wish list, and so we tend to get into the areas we'd love to have and where our frustrations are. We do have excellent bank relationships. These discussions today about where next, where is it really hurting us, what can you do? And there is a risk, I suppose. If somebody comes out the woodwork now with a fantastic, either with a bank and one of these, new technology companies, could steal a march here. But that's, I don't see that happening rapidly. I see a lot of caution. There's a lot of inertia in what we already have. And we owe our long-term relationships, to stay with them. So we'd have to be very sure before we jump ship. Mm-hmm. But is the world changing more than we think? Think of 2008.
Great. So I think what I would sort of take away from some of those comments is the value of those banking relationships. Although we're picking up on the things that we would like to see improved and we'd like to see changed, fundamentally there is a huge amount of value in those banking relationships, which I think we all recognise, and we want to develop and sort of enhance those even further. But there are some frustrations which perhaps we need to overcome. And in some cases, there may be non-bank providers who can complement or supplement some of those services in some cases. Any final questions? We've got time just for one more. No? Well, in which case, I've got a question, just to finalise. If we're doing this panel again next year, obviously making certain assumptions there, but if we were to come back in a year's time, if there was one thing that our banking community here could have done for you in that time, what would that one thing be? And I'm going to ask each of you. So, Tobias, you're nearest.
Can I choose two? Definitely compliance management. Certainly compliance management.
Mine's a little broader. I would like our message to be injected into the bank's organization at the right level. So they're hearing what we're saying about the frustration with basic services and the importance on fixing basic services. If we can't inject at the right level in the bank and they're not hearing this, it's never going to happen. Thank you.
I'm afraid, Helen, I've got 2 1-points. I'd love to see some progress in the compliance area, maybe with blockchain, just something really concrete. However it comes, I don't say that I know the right way, but some real improvement. And the second would be this whole thing about collaboration. Yes, we collaborate with the banks. I really want you guys to collaborate and be stronger together, like with the regulators, like with the government, like in bringing standardization. And to that end, I'd just like to share something I came across recently. It's an old African proverb. If you want to go faster, go alone. If you want to go far, go together. I'll leave you with that thought.
Well, for FGV and for me personally, I would like to see banks work better with each other. I echo what you said, Phil, in a sense that as much as we want to move into greater parts of the world, there are certain integrities that specific banks can support us. You mentioned Africa, or was it? You mentioned about Africa. Yeah, there is one specific brand name that is very strong in Africa. Unfortunately, we are not a natural corporate customer to them. Nevertheless, trying to implement something in Africa where we have done so much with other banks, other parts of the world, and that specific bank in Africa requires a lot degree of customization, which just defeats the whole purpose of trying to be bank agnostic with SWIFT.
Great, thank you. So we've come to the end of our session now, and I think Phil's brilliantly done my job for me by giving those final words. If you want to go faster, go alone. If you want to go far, go together. And I think that sums up so many of the themes we've talked about before, up until now. So an enormous thanks to our panel today, and thank you to you for coming along. There is a cocktail party, Swift for Corporates, celebrating 20 years. I think it's on the Swift stand, the Everest Lounge next to the Swift stand at 4:30 this afternoon. So 4:30 this afternoon, the Everest Lounge next to the Swift stand is celebrating 20 years of Swift for Corporate. So thank you very much indeed.